The future of the Iraqi economy and currency reform. What you need to know. The economic landscape of Iraq is shifting rapidly, with major financial and monetary changes on the horizon. These developments are set to impact not only Iraq, but also those who are closely following the trajectory of its economy. The excitement and anticipation surrounding these changes are palpable, and it's essential to understand the key factors at play. The big picture. A transformative period. For those who have been eagerly waiting for economic reforms, the current moment feels like standing on the edge of a significant breakthrough. The Iraqi economy is approaching a turning point, with discussions surrounding monetary reform, currency adjustments, and a restructured financial framework gaining momentum. While details continue to emerge, it's becoming increasingly clear that Iraq is poised for fundamental economic shifts. Government leaders, including Prime Minister Mohammed Shia al-Sudani and key financial officials, have hinted at imminent announcements. These will address critical aspects such as exchange rates, the introduction of lower denomination banknotes, and a broader financial stabilization strategy. This process has been in motion for some time, but it now appears that the next phase is about to take center stage. Timelines and expectations. According to expert insights and government statements, significant updates are expected within the next week. The proposed exchange rate is anticipated to be set at 1,310 dinars per US dollar. While this figure may not be the dramatic change some hoped for, patience remains crucial. The government is actively working to stabilize the economy, ensuring a smooth transition that prioritizes long-term stability over short-term gains. The primary objective is to regulate cash flow and protect the integrity of the new financial structure. This measured approach will prevent economic shocks and create a foundation for sustained growth. Prime Minister al-Sudani is dedicated to overseeing this transition carefully, ensuring that currency distribution remains controlled and secure. Why stability matters. The ultimate goal of these reforms is to create a more stable and prosperous Iraqi economy. A carefully managed exchange rate, combined with structured currency distribution, will provide businesses with the confidence to expand, generate employment opportunities, and encourage overall economic resilience. These changes are not merely about immediate financial shifts. They represent a strategic effort to build a sustainable future for Iraq's economy. While the waiting period may feel uncertain, it's essential to recognize the importance of stability in monetary policy. Economic transformations require time, planning, and careful execution to prevent unintended consequences. A steady, controlled approach will yield greater benefits in the long run. The role of Iraqi citizens. Public sentiment is shifting towards cautious optimism as people seek clarity on these changes. The more transparent the government is in communicating its financial strategy, the easier it will be for citizens to prepare and adjust. Maintaining a collective, calm perspective will facilitate a smoother transition when these reforms take effect. However, patience does not mean inaction. Staying informed, monitoring market reactions, and engaging in discussions will help individuals adapt more effectively. Economic landscapes evolve, and those who proactively educate themselves will be better equipped to navigate these shifts. The rise of digital transactions and cash limitations. In a parallel development, discussions around the U.S. Treasury's new financial approach, particularly the introduction of the United States Treasury Note, USN, have been gaining attention. One notable change includes a shift in cash withdrawal limits, increasing from $500 to $3,000. This move signals a broader push towards digital transactions and reduced reliance on physical cash. Governments worldwide are gradually implementing measures to encourage digital payments, aiming to enhance financial security, reduce money laundering risks, and streamline economic transactions. While some may view cash withdrawal limits as restrictive, they are a necessary step in managing financial stability and ensuring a controlled transition into a more digitally driven economy. Preparing for financial shifts. As financial policies evolve, individuals must adapt their strategies accordingly. Understanding withdrawal limits and planning finances accordingly will be essential for those seeking to navigate these changes smoothly. Utilizing digital payment methods and diversifying financial management approaches will provide flexibility in an evolving economic environment. For those undergoing currency exchanges or redemptions, it's advisable to stay informed about new policies and adjust expectations. Sharing experiences and insights within